In recent decades, a profound and intriguing debate has emerged about the possibility that the US dollar could lose its prestigious position as the world's strongest and most stable currency. This topic has been notably mentioned by Ray Dalio, a well-known and respected investor who has pointed out this concern, indicating that we might be approaching the sixth stage of a changing world order. In his detailed analyses and writings, Dalio suggests that a growing number of countries could begin to challenge the dominant role of the United States as the most influential and powerful nation on the global stage. This is not simply an abstract theory. Recently, we have seen China and Brazil sign a strategic agreement to bypass the use of the dollar in their trade exchanges. This move represents a potential threat to the leadership of the U.S. currency in international trade. This analysis will delve into the meaning and implications behind these movements. Is it possible that the dollar will cede its role as the world's reserve currency? Should we worry about the future of our savings if they are denominated in dollars? We will explore the current situation in detail, the trade agreement between China and Brazil, as well as the rich history of dollar dominance. Upon completion, you will have a clear understanding of whether the dollar really faces an imminent risk and if you need to consider any action regarding your investments and savings. Before delving into the details of this recent agreement, it is crucial to thoroughly understand the role that the dollar has played in the global economy and how it has maintained its privileged status for decades. To do this, we will start with the essentials. What does it mean exactly to be a reserve currency? Since 1945, following the establishment of the Bretton Woods Agreement, the dollar has been much more than just a currency. It was established as the global benchmark par excellence. This agreement positioned the dollar as the world's primary reserve currency, thanks to its reputation for safety and stability. In simple terms, this means that countries and companies not only save in dollars but also use them to buy and sell goods in the international market. Fundamental products such as oil, minerals, and food are quoted in dollars. This status has provided a significant economic advantage to the United States, as every time dollars are required for international commercial transactions, the demand for that currency increases, thus strengthening the country's economic position. However, a crucial question arises. Is this advantage eternal or does it have a possible end? Ray Dalio offers an interesting argument. No reserve currency has its position assured perpetually. Economic history teaches us that no currency has been in that position indefinitely. Before the dollar, currencies such as the British pound, the Dutch guilder, and the Spanish real dominated the global economic scene in their time. Each of these currencies experienced cycles of rise, boom, and eventual decline. According to Dalio, the dollar could currently be entering its decline phase. This process begins when labor costs in the dominant economy reach such high levels that other nations begin to compete with cheaper and more efficient products. This phenomenon has already been observed in recent decades. Many U.S. companies have moved their production to countries like China due to lower costs. The recent agreement between China and Brazil is just one of the most visible symptoms of this imminent change. These two countries have decided to conduct their trade using their own national currencies, the Chinese yuan and the Brazilian real, thus avoiding the intermediate use of the U.S. dollar. In practical terms, when a Brazilian company acquires products from China, it pays in reals. Similarly, when a Chinese company buys Brazilian products, it pays in yuan. It is not necessary to go through the US dollar. The importance of this agreement lies in the fact that China has been Brazil's most important trading partner for more than a full decade, achieving a record bilateral trade of $150 billion in 2023. The ability to trade directly, without relying on the US dollar, inevitably decreases the global demand for this currency, indirectly weakening it. In parallel, other countries such as Russia and India have expressed interest in reducing their dependence on the dollar for their international commercial transactions. Even Saudi Arabia has considered accepting yuan for oil sales to China. This gradual change could be indicative of the beginnings of the end of the dollar's absolute dominance. If the dollar were to lose its status as the world's primary reserve currency, the economic repercussions could be profound and significant. A decrease in global demand would lower its value against other world currencies, possibly triggering inflation within the United States as imports become more expensive. During this period, the dollar was established as the main currency for international transactions. The boom was reached in the following decades, with the United States at the forefront of innovation, technology, and economic development. However, the cost of living rose, and production began to move abroad, especially to China. marking the beginning of a decline stage. Currently, with the growing competition from China and other emerging nations, the United States faces significant challenges. One of these challenges is that other countries are decreasing their dollar reserves. At the beginning of the 2000s, more than 70% of global reserves were in dollars, but today that percentage has dropped to 59%, the lowest level since 1995. This indicates that the dollar's dominance is being questioned. Despite these signs, the dollar has not completely lost its strength. There are several ways to measure the strength of a currency, and the dollar remains strong in certain aspects. One of them is the Dollar Value Index, which measures its power against other important currencies in the world. Although it has experienced some recent falls generally, the dollar has recovered after each crisis. Another way to evaluate its strength is by observing the demand for U.S. Treasury bonds. Considered safe investments, the demand for these bonds has recently increased, especially after the Federal Reserve raised interest rates to 5%. This demonstrates that many investors continue to trust the dollar as a safe investment. The BRICS bloc countries, Brazil, Russia, India, China, and South Africa, are increasing their economic weight. They represent some of the fastest-growing economies, and their decision to reduce dependence on the dollar could change the global landscape. If they establish a common currency or promote the use of their local currencies, they could further weaken the dollar's influence. The war between Russia and Ukraine has accelerated this process. When Europe sanctioned Russia by prohibiting it from accessing its dollars in European banks, Russia demanded payments in rubles for its gas. This was a direct blow to the dollar, forcing several European countries to seek alternatives. Although the dollar faces multiple threats, replacing it will not be easy for any other currency. To achieve this, the competing currency must be widely accepted, have a strong economy to back it up, and offer security to investors. Currently, no other currency meets all these criteria. However, there are some trends that could put the dollar at risk in the future. Among them is China's rapid economic growth, which is expected to surpass that of the United States by 2038. If China manages to position the yuan as a viable alternative for global transactions, the dollar could begin to lose leadership. In summary, the dollar remains the dominant currency in the world, but it faces significant challenges. The decision of China and Brazil to trade without using dollars, along with the growing economic power of the BRICS, suggests that the influence of the US dollar could decrease in the long term. However, in the short term, it is unlikely that the dollar will be displaced from its predominant position. For those who have savings in dollars, there is no reason to be alarmed, but it is crucial to be attentive to changes in the global economy. Diversifying investments could be a sensible strategy, considering that the future is always uncertain. What is clear is that the financial world is constantly changing, and we must be prepared to adapt to what is to come. If you are concerned about how these economic changes may affect your finances and you want to take control of your debts, I invite you to watch my next video. How to get out of debt in 6 months and how you can do it too. In this video, I share proven strategies that will help you free yourself from debt faster than you think. Click here and start building a more stable financial future.